If you've ever wondered what all the buzz is about, you're not alone. This is the crypto project that's seemingly everywhere right now, capturing the imagination of millions across the globe. Wild rumors are circulating, major banks are supposedly adopting Pi, and some even say it's about to change the entire financial system as we know it. There are claims that a single Pi coin could soon be worth hundreds of thousands of dollars, sparking dreams of instant wealth for early adopters. The story is irresistible. Just tap your phone, and you could get rich overnight, or so the legend goes. It's a narrative that's hard to ignore, especially in a world hungry for the next big thing. But is there any truth to these claims, or is this just another case of crypto hype gone wild? With so much noise, it's tough to separate fact from fiction. We've seen this before. Hype builds, prices are predicted to skyrocket, and everyone wants in before it's too late. But reality rarely matches the dream. Many projects have promised the moon, only to leave hopeful investors disappointed. Today we're cutting through the noise and speculation to see what's really happening with Pi Network and whether it lives up to the hype. We'll break down what Pi actually is, how it works, and where these wild rumors started in the first place. Plus, we'll look at what the facts are as of February 2026, so you have the most up-to-date information. Our goal is simple: separate real milestones from community-driven myths, and help you make sense of the headlines. By the end, you'll know if Pi's big bank deal is truly a financial revolution in the making, or just another crypto fantasy that's too good to be true. The headline number, $314,159 per Pi coin, the so-called Global Consensus Value, or GCV. This figure is a clever nod to the mathematical constant Pi, fueling the idea that banks are secretly adopting Pi at this price. But here's the truth: there's no official announcement, no bank confirmation, and no regulatory filing supporting this. The GCV is a community-created meme, not an economic reality. It's a shared aspiration, not a negotiated price. If Pi were valued at over $300,000 per coin, its market cap would dwarf the entire global economy. Clearly impossible. Banks set asset values based on real-world factors, not memes. The GCV is a symbol of hope, not a financial fact. Believing in it is an act of faith, not analysis. Always separate community dreams from market realities. Let's ground ourselves in what actually happened, cutting through the noise and speculation that surrounded Pi Network throughout 2025. There were countless rumors, wild predictions, and heated debates online, but the real story is both more nuanced and more impressive than many expected. In February 2025, Pi launched its long-awaited open mainnet. For the first time, users could finally transact Pi outside the app, sending and receiving coins on the open blockchain. This was a huge milestone, marking Pi's transition from a closed ecosystem to a real, functioning cryptocurrency. The price of Pi surged quickly after launch, peaking at $341 before stabilizing around $132. This gave Pi a market cap of about $9 billion, an impressive figure for a new entrant, though it fell short of the sky-high GCV numbers some had hoped for. In addition, Pi announced plans to adopt ISO 2022, a global banking standard that's becoming essential for interoperability in the financial world. The team targeted November 2025 for full integration, signaling their intent to play on the world stage. This announcement sparked a wave of rumors about secret bank partnerships and major deals. But in reality, adopting ISO 2022 is a technical upgrade, not a backdoor deal with big banks. It's about making Pi compatible with global financial systems. By the end of 2025, Pi's user base had exploded to over 60 million people worldwide, with 14 million users successfully completing KYC verification. This level of adoption is rare in the crypto world and shows real momentum. The real story here is a successful mainnet launch achieved through years of development and community effort. Pi now has a real-world price in the single digits, concrete plans for ISO 2022 integration, and a growing ecosystem of apps and services. Most importantly, it boasts a massive active user base that's driving adoption and innovation from the ground up. These are tangible achievements, real milestones that set Pi apart from countless other projects that never made it this far. The project's true strength lies in its passionate community and steady technical progress, not in mythical price tags or empty promises. So, focus on what's real: adoption, technology, and user growth. These are the foundations of lasting success in crypto. The facts matter more than the hype. It's easy to get swept up in speculation, but the numbers and progress speak for themselves. Pi's journey is just beginning, and while there's still a long road ahead, it's a journey grounded in reality, not fantasy. Let's keep our eyes on what's actually happening and watch as Pi continues to evolve in the real world. What's ISO 2022, and why does it matter? If you've ever wondered how banks and cryptocurrencies might one day speak the same language, this is where it all begins. ISO 2022 is more than just a technical upgrade, it's a global financial messaging standard that's reshaping how money moves around the world. Think of ISO 2022 as a universal translator for banks, payment systems, and even digital currencies. It allows financial institutions from different countries and backgrounds to communicate seamlessly, reducing errors and delays. This new standard is designed to make transactions not only faster, but also more transparent and secure. By November 2025, all major banks are required to switch to this system. That means the entire global banking network is undergoing a massive transformation, paving the way for smoother cross-border payments and better fraud detection. Pi's plan to become ISO 2022 compliant is a strategic move. By aligning with this standard, Pi positions itself to potentially integrate more easily with traditional banks and payment networks. This could open doors for new partnerships and use cases that weren't possible before. This puts Pi in the same league as other compliant cryptos like XRP and Stellar, which are already recognized for their efforts to bridge the gap between digital assets and the traditional financial world. But let's be clear, compliance is a technical achievement, not a guarantee of adoption or price growth. It means Pi is ready for the conversation, but it doesn't mean banks will automatically start using it or that its value will skyrocket overnight. It's like learning a new language. You might be fluent, but that doesn't mean you'll instantly make new friends. The infrastructure is there, but real-world adoption takes time, trust, and proven utility. The ISO 2022 plan is real progress, but it's not proof of a secret bank deal or a guaranteed partnership. It's a necessary step, but not the final destination. Ultimately, it's a move toward interoperability, making it easier for different financial systems to work together. But remember, this is just one piece of a much larger puzzle. Don't confuse technical upgrades with market guarantees. The journey from compliance to mainstream adoption is long, and there are no shortcuts. So, what makes Pi different? Pi lets anyone mine coins from their phone. No expensive hardware, no wasted energy. It uses the Stellar Consensus Protocol, relying on trusted circles instead of power-hungry mining. The network aims for high transaction speeds, up to 70,000 per second. Beyond the coin, Pi is building an ecosystem of apps, from exchanges to identity tools. Events like PiFest showed real-world commerce, with merchants accepting Pi for goods and services. Pi's foundation: accessible mining, fast transactions, and a push for real utility. Pi's biggest asset? Its massive global user base, over 60 million strong. The project is especially popular in developing regions where mobile mining offers a first step into crypto. For many, Pi is a low-barrier way to join the digital economy. After open mainnet, small-scale commerce took off. People trading goods and services for Pi, especially after PiFest. But daily active wallets remain low, about 42,000 at peak, showing most users are still just mining and holding. The challenge: turn passive miners into active participants. Pi's reach is huge, but real economic activity is still catching up. The project's future depends on growing real-world usage. Size is impressive, but engagement is what matters. Pi's road ahead isn't easy. The biggest challenge: low on-chain activity. Millions mine, but few transact. Regulatory risks loom, especially with Pi's referral-driven growth model drawing scrutiny. Pi isn't listed on major exchanges like Binance or Coinbase, limiting liquidity and exposure. Without big exchange listings, volatility remains high, and institutional adoption is tough. The core team's ambitions are huge, building a scalable blockchain, a dApp ecosystem, and bridging to banks. But execution risk is real. Tech hurdles, developer adoption, and regulatory issues could derail progress. Pi's vision is bold, but it's still early days. Success depends on turning hype into real, sustainable growth. Let's draw the line between hype and reality, the dream, a secret bank deal, and a 314,159 Pi coin, the reality, no evidence, no deal, and a real-world price between $1 and $3. ISO 2022 compliance is a technical step, not a bank partnership. Pi's real wins: 60 million users, open mainnet, and grassroots commerce. The hype is about instant riches. The reality is about building a real business. The community values potential. The market values utility and activity. Don't confuse dreams with facts. Pi's future depends on real adoption, not rumors. Stay grounded. Watch what's real, not what's wished for. So, should you buy into the Pi dream? The $314,159 rumor is pure fantasy. Ignore it, but Pi's achievements are real. A huge user base, accessible mining, and technical progress. The smart approach is cautious optimism. Recognize the risks, but don't dismiss the project outright. Key challenges remain: low activity, regulatory uncertainty, and no major exchange listings. Pi's future depends on execution. Can the team deliver real utility and attract developers? Participating costs nothing but time, so the risk is low. Treat Pi as a long-term experiment, not a get-rich-quick scheme. Watch for real signals, exchange listings, growing on-chain activity, and developer interest. Don't expect overnight wealth. Focus on facts, not fantasies. The Pi dream is exciting, but only real progress will determine its fate. Stay informed, stay realistic, and keep your expectations in check.